Hi traders, welcome back to the channel. In this video, I'm going to go through the latest CFTC reports. We're going to have a look at the commitment of traders. We're going to have a look at if there's been any significant changes that have caught our eye, and we're going to look at is that going to give us any kind of opportunity within the market this week. Now, let's start off with grains then. Nothing really here to kind of look into too much, apart from the fact we can see that there's been some significant changes, especially in the likes of the corn market. But really, our focus is going to be moving over to sort of energies, metals, currencies. We're big currency traders, obviously. We are FX traders essentially. What I noticed was though that we are starting to see sort of a change in the sort of positioning here. Now you can see I've got this report here. We've got this summary report. I'm just going to go to the detailed report of the non-commercials, so the speculators within the market essentially. And we're going to have a little look at what hedge funds are doing essentially in terms of positioning. Now, on crude oil, it's actually important to note that yes, we have seen an increase in contracts, but these have not really been at the sort of higher levels. Higher levels were back in sort of February, where we saw contracts up at sort of 230,000. This is actually a little bit more to the low side. If you look at the 52-week low there, we're at 140,000 contracts. So it is still more to the sort of downside than it is. So that kind of momentum that we've seen, that sort of sell-in pressure over the last 4 or 5 weeks has eased slightly. Looking at last week's data, but still, nothing really here that's going to make me want to be a significant buyer of oil just yet. I want to see it kind of reach an extreme short position before I look at that kind of reversal in that market. Let's go take a look at gold and silver. Silver, quite interesting, has actually increased contracts. So again, we've kind of seen that continuation of long contracts being built up in silver. So from February 4th, we can see that we started out at 50,000 contracts. We're now at 59,000 contracts. So 9,000 contracts to the upside here for hedge funds, so they are still buying. On the gold side of things, though, you can actually see they're still reducing their positions. So they were up at 302,000, now down at 236,000. So we're actually seeing the move away from gold essentially going more into silver. That relates really well to our gold silver ratio chart that we were talking about over these past few weeks, how that is at a high level where we usually see the market go and favor silver because gold is overbought compared to the silver price. Okay, looking down then and moving on down to currencies, what has kind of stood out for me here? One thing that really stood out is euro. We can see that euro now in positive territory. This is the first time we've actually reached positive numbers since October of 2024. Now, what we did see was that we were extremely short on euro, and we started to see extremely long euro back in those days, and then we started to see them kind of decrease those positions. But now that we've seen since kind of February, we were at minus 58,000 contracts short. We even got to minus 64,000 contracts short, which was very much near those 52-week lows. And now we've started to see hedge funds buying euros, and that makes a ton of sense considering the fundamental changes that have happened in Europe over these past few weeks. So we're seeing that now driven into this CFTC data as well. You can also see that in bond yields as well. The differences or the differentials between the US 10-year bond yield and the Euro 10-year bond yields, for instance, you can see that there's been a big swing in that. So Euro is definitely something I'm very interested in being a potential buyer of. If we look at the Japanese yen, again, they increased their contracts to another historical high. We talked about last week how this could mean that we're starting to see sort of maybe a taper back from the hedge funds because they've reached an all-time high. So yen's still on my radar a little bit. I do favour yen longs like the hedge funds here, but they are doing it at such extreme levels now. It's kind of making me a little bit wary on that sort of yen buyer side. So those are the kind of real markets I'm looking at. Euro I like. If we take a look across the board at sort of markets that are still kind of reducing contracts, you can see here they're still selling the Australian dollar, so maybe Euro Oz long makes a ton of sense here. So let's go take a look at Euro Oz at the moment, because I can see that we obviously are very bullish here. The market broke out of these recent swing highs around about that 168 handle, and we've significantly sort of pushed higher here. Now, if the hedge funds are continuing to sort of buy euro, sell Australian dollars, then this makes a lot of sense, right? The market is still pushing higher. Now, if I just zoom out up to a monthly chart, you can see that there's still some room to the upside. This 2020 high here is something I'm very interested, especially when it comes to kind of this 179.80 level. This is an area where the market obviously spiked up into and sort of closed at, and then we opened that area after COVID hit, and we've seen a kind of downside from that. So that could be a good target for anyone that's looking to go long. When I look at the daily trend at the moment, we've had a very strong bullish move. So after a strong bullish move, I would expect some kind of pullback. You know, the market can't just keep going and going and going and going. But now it's kind of talking about where's that price where we could start to maybe think about getting involved. Now, this 1.07 area is quite interesting to me because it was a pause day. We had a nice little rally. We paused in the market. We had a down day, technically, and then we continued to push higher. So this area to me looks quite interesting to go long, and I'm looking at the 4-hour time frame, and I'm looking at the 1-hour time frame for opportunities, because when we see that sort of pullback in the market, we can see that the 4-hour time frame is creating lower lows and lower highs. If that changes and we start to see higher highs, higher lows, very similar to what happened back down here in February, then that could obviously lead to some potential upside in this market. If we look at the hourly chart, you can see that downtrend in a little bit more detail. Okay, so if we start to see significant breakouts in trend here to the upside, it could mean that Euro Oz is going to trade higher. So let's go talk about silver then. We've talked about silver to death, I think, but still very important to talk about because it's a market that we can focus on, right? There's no point just trying to trade every market. Why don't we find one market that has everything set up for us that we can try and take advantage of? So still favour silver longs. Of course, you know, gold silver ratio up in that 90s was the kind of trigger for me to be looking at silver long opportunities. Been buying silver all year, and we can see that we're in that potential phase 2 of a daily bullish trend now. So what we should see in theory is on a 4-hour or even a 1-hour trend is that it's starting to make lower lows and lower highs, which it is. Great, fantastic. We need that situation to change in order to then start, you know, potentially buying back into this market. Now, ideally, I'd like to do that at a very good price. You know, when I'm looking at sort of $33.69, not a great price in my opinion. I think that we could, you know, I want to be looking at down towards the kind of $33, maybe even down into the $32, where we've got this really nice sort of trend line support that formed from the beginning of this year. You know, maybe if we can kind of pull back into that area, that would be a very nice area to be long, just from a reward to risk standpoint. I can have stop losses sort of below this daily swing low at that point, and hopefully then price may kind of continue to push higher. So silver, I think, is a good market for me. I like the idea of buying euro, especially if we kind of take a look at what's happening in terms of bond yields at the moment. Euro bond yields have been pushing to the upside, especially when you look at it from a daily point of view. We've seen that nice kind of push recently higher. When you go take a look at the sort of 10-year yield as well, market has rallied significantly, and that's what we've been focusing a lot, especially when we consider what's happened in sort of Germany and whatnot. So if we compare that to the US 10-year yield, it's down, right? And if we do the sum where we go, let's go to first of all, let's actually go to euro, US dollar. I think using the compare tool is a brilliant thing to do, right? So what we're looking at essentially is if we go to EU 10-year, right, and we're just going to minus that spread essentially from the US 10-year yields, okay? So you've got the United States government bond yields and you've got the Euro 10-year government bond yields, okay? And I'm just going to click accept. And that's going to bring us to this chart here. Now, what I did want to do is compare that to euro dollar prices. So I'm going to hit that plus button. I'm just going to go to euro US dollar, and I'm just going to put that onto a new price scale. And what you'll notice is there's a strong correlation between the differentials in bond yields to euro US dollar prices. So this is what I'm going to try and highlight to you here, is that what we typically see is the bond yields go first, currencies then follow a little bit. You can see that back in September, where we had the spread between the yields start pushing in lower. We then saw euro dollar follow that. Okay, so just a couple of things to know from there. We've seen hedge funds obviously buy into euro. You know, what are hedge funds typically doing? They might go and sell EU bonds, for instance, and we've seen that they are essentially buying US bonds at the moment. So what you'll see is that kind of flow within yields, right? So the yield will go down essentially as people invest into bonds, and then what we will see is that because the yield comes in lower, investors will want to go and put their money into higher yielding assets. And if we see EU bonds continue, EU bond yields continue to rise, investors will want to go and invest in Europe rather than in the US. That's why we're getting this kind of move higher. And if this continues, then we're looking at potential breakouts on euro US dollar at the moment, which, you know, is trading up at that 1.09. If it can break those highs, then that would be significant. But what we're seeing at the moment in the spread is that we're seeing that it's coming down at the minute. So if we see obviously continuation of that, then I think eventually euro dollar will follow. But if we see a continuation to the upside, again, I think euro dollar will break higher. But that being said, hedge funds are buying euro, and that's why we're seeing some decent upside as well. So hopefully that all made sense. If you have any questions about this, feel free to drop me a question in the comment section. Really appreciate having the conversation with you guys. So if you did enjoy it as well, leave a thumb up and subscribe if you're new, and I'll speak to you very, very soon.